is equal year, any serial number is that any date in column A. So if you check that, it's giving us value error, which means our date is not in the correct format. We expected it to give us 2021 as the year, but it is giving us value error. So we have to correct this by introducing something. We also agreed yesterday that Excel only accepts dates if whatever separates the date, the month, and the year is a slash or an hyphen. So for us to correct this date, what should we do for us to correct this date that it can be the correct format? What should we do? Where are we supposed to go to? If you've highlighted the whole of this column like this, we want to change it to the correct format. Where are we going to after highlighting the whole of column A? Somebody? After highlighting column A, what are we supposed to do next? Where are we supposed to go to? Okay. We move to, at the top of your desktop, you are able to see home, and down of that row where we have file home, there's another row to your right. The last thing in your right, if you click home, then the last item to your right hand side is written find and select. So you click there to get what we call replace. So if you click replace, there is a menu that pops up. There's a menu that pops up. So having seen that menu, it tells you find what and replace with what. What are you finding and what are you replacing it? We are finding the dots that separates the month and the year and the date. Then you replace it with a slash. Having done that, you say replace all. Then you close that menu. So by doing so, you are able to see your dates are now in a different format. Let's now see if we use our formula. I'm now going to get 2021 as the year. So activate your cell, year, tab, then serial. So serial is any date here in column A, enter. We are now able to get 2021. It means we have now corrected the first problem that was there with our date format. The next thing that you're supposed to do is, since we want to prepare our financial statements for the first 4 months of the year, we are supposed to now make the next step in the preparation of the financial statements. That next step is introducing two columns. We have to introduce first column between column A and B by highlighting column B, then Control Shift plus to get a new column, and there's also another column at the end of column D, and column E. We are going to have another column. Can someone remind us of the title of this column B? Which title should we give column B? And which title should we give column E? If you can recall what we did yesterday, which name should we give to column B and E, respectively? Okay, Pauline is telling us that we are going to name this column here month, and Nicholas is telling us that this column we are going to call it mapping. Okay, from there, what are we supposed to do next? For us to get only month in this column here, because we are interested in months, we want to prepare our financial statements on monthly basis for the first 4 months of the year. So, which formula are we going to use here to help us get only months without dates and year? We are only interested in the month. Which formula are we going to insert here and autofill to help us get the months of these specific dates? Somebody? Very good. Amaris is telling us to use month formula. Okay. Month activated there. The next thing that we are going to do is to pick the serial number. Our serial number is now the date itself. Enter. If you enter, it is not giving us the month specifically the way we want it. There's something that is wrong with this. How are we supposed to correct this so that we only get the month? For example, if you can see the date here in A2, our date is 1st of January 2021. So we expect this column B to be 1, not whatever we are seeing appearing there. Okay. How did we agree yesterday that we correct this so that we only get the month itself, not the entire item that is appearing in column B, row 2? There's something that we did yesterday. What are we supposed to do from there? Change formats by decreasing decimal place to 0, change to number. Very good, Pauline. I can see we are moving together. So we move here to this place here where we have dates and we change it to number. If you change it to number, it has 2 decimal places. So we reduce the decimal places to 0 by using this one here, that is the one that is pointing the right hand side, telling us decrease decimal places. So if you double click, you're going to get 1 there. How do we now autofill without dragging? You place your cursor here and it shows you the plus that is black, the thick one that is black, entirely black. Then you double click to autofill your date. So you are now able to see the months only appearing in that column. Okay, having done that, we again agreed that there's something we are supposed to do to these titles here so that we start doing our mapping. What did we agree? Having highlighted all of these titles here, what are we supposed to do to them? What are we supposed to do to the titles? Okay, apply filter. Any other person? Oh, are you not able to see the screen? Is our screen not visible? Oh. Okay, let me share the entire screen so that you see what I'm trying to say. Okay, sorry for that.
This meeting is being recorded.
Okay, so up to that point, we now move to this place here, data. Then there's something that is representing a funnel by the name filter. So you click that filter and the titles now changes to give us some drop down menus. So if you check here, let's see, our drop down menu is now giving us the 4 months of the year. The first 4 months, if you check here, you are able to see the first 4 months in this order. So we have now changed the format to, we've now filtered the titles. From here, we now start doing what we call mapping.
Mwalimu,
Yes.
we can't see
Yes.
anything. We can't see your screen.
Mwalimu, we can't see anything. We can't see your screen.
Cost of goods sold. From there, we move to other expenses. So the expenses that are there, if we are able to go through this, our information, we are able to see corporate taxes, cost of capital, of course, which is the interest expense. We're able to see depreciation and amortization. Okay, so
This meeting is being recorded. This meeting is being recorded.
okay, let's proceed. So from cost of goods sold, we are now able to move to something else that is now the operating expense. And under operating expense, we are able to see the only depreciation expense. So let's see. So as you can see now, we have one is written depreciation and amortization, and the last three are just depreciation. So, but all of them represent the same thing. So we want them to have as common name. That's why we do the mapping. Mapping helps us to group things with the different names or different identities, but they have common place of classification. So depreciation and amortization and depreciation all are representing the same thing. So we want to give them a common name, all of them. So let's say we are going to call them depreciation. Then we autofill. From depreciation, we are able to see cost of capital, our cost of capital, you can give it a different name, interest, from that, the next item that I'm able to see here, that is an income statement item, is corporate taxes. So we just give them the same name, taxes. So we do mapping for all the items that we have here. For the income statement items, we have taken sales, corporate taxes we have taken care of, cost of capital, which is the interest, COGS, we have taken care of that. Okay, we can now go to balance sheet items. The first thing that I'm able to see is land and buildings. Land and buildings, we can give it a name or we maintain the name. So let's use a single name. The next item that we have there, I was able to see bank. Bank, we will maintain the name. I also saw something by the name stock. I can give it a different name, maybe inventory, or even maintain the name stock. The next item that I've also seen here is bonds payable. Bonds payable. Okay, so today I want us to do it this way. We can make this bonds payable to be loan. From there, is there something else that we are leaving outside the list, which is part of the items here and we have not captured? Okay, for this our case, we are only working for 4 months, and you are able to scroll it and see if there's something that we are leaving outside. What if you add 1,000 items or even 20,000 items here? It would have been very hectic. So how will you know that there's something we are leaving out? You come back here, you select all. I'm taking care of all of them one by one. You now select all and you give OK. So if you are keen enough, you will be able to see that whatever is here is also this other side. But now with the corresponding name that we gave them. For example, our sales, we gave them the name revenue. That is what they have there. So anywhere that is written sales here will be written revenue. Our corporate taxes, we gave them a name taxes. Anything in the name of corporate taxes here will be taxes. Our land and buildings, we now give them the name buildings. And we are now able to see it is only having buildings. Bank, we decided to maintain the name. Cost of goods sold, we only said now we write it without abbreviations. Our stock, we decided to maintain the name stock. That is it. So how will you now confirm that there's something that you have not captured or you've captured everything? If you check this column here, column C, where we have particulars, and the column E, where we have mapping, you'll find that all these items have been filled. All these items, there is no single row that is empty. So if you could have left something without mapping it, the corresponding item here in the mapping column could have been empty. That one confirms that you've omitted something. But if all of them are having corresponding names here that we created for them as we are doing our mapping, it confirms that we have mapped everything. Are we all together up to that point? Up to that point, are we together? Okay, somebody is inquiring, what if we have many rows? So by coming here and selecting those items one by one and combining them, giving them a name, it helps you to ensure that everything is taken care of. So a slight recap that you do now is just to scroll and see, is there any, if there is any column here, any row here that is empty, it confirms that it was not given a name during filtering when you are doing your mapping. But since we are able to scroll and see like there's no empty row in this column here, it confirms that everything has been captured. So from here, we now want to start the journey of preparing our financial statements in the next sheet, not in the same sheet. The first sheet, we call it data. The second sheet, we are now calling it FS, financial statements. So we want to prepare our financial statements in this other sheet, that is balance sheet and income statement. So the first step that we do is to highlight the whole of this column E, then we copy. Then we go to next sheet, that is S. We place it, let's start with at this point, we paste of it. Okay, having done so, yesterday we found that there's a lot of repetition, but we only want, if it is bank, we only want bank alone. If it is revenue, we only want revenue, but we want to get the total revenues to be taken care of at that point. What did we agree that we do so that we only remain with one revenue, not revenue, revenue, revenue? How do we do away with the repetitions that has been done here? Okay, you are supposed to remove the duplicates. So you remove the duplicates by going to data. Then you move to this place here, written remove duplicates. Our data as headers, we give it okay. And we have now removed all the duplicates. Okay, we remove the duplicates. We have done so. So let's proceed. Having done so, we can now change this name here to be details. Then in this row, number 1 from column C, we now have the months up to 4. And we all agreed that we cannot write the months in words because when we were doing our formatting here, we wrote the months in numbers. So that's why we do it this way, so that if we do our referencing, it automatically detects that. So from here, the next thing that we do is to introduce our formula. And if you can recall, we said that in preparing financial statement, we use the mapping concept. So you activate our cell, then we say some ifs, it is appearing there, you click the down arrow to take you to some if. If it is blue, appearing in blue that way, the simplest way instead of typing the entire formula is you click your tab button. If you're not able to see that tab button, if your laptop does not have the word tab somewhere written there, then to your left-hand side, towards the top, you will see 2 arrows pointing opposite direction. That is the tab button. So the first thing that is required here is the sum range. Where are we going to get our sum range? Our sum range is in the original data, and it is under amount. So you highlight the whole of this, then you $reference it. You lock the whole of it. There's a shortcut of locking the whole of sum range. Can someone remind us on how to lock the whole of sum range? Can someone remind us on how to $reference the entire sum range? You hold Fn, then F4, comma. The next item is criteria 1 range. Our criteria 1 is month. So you highlight the whole of column B. Then you do the same thing, you $reference it, comma. Criteria 1, now we go back to the FS sheet. So our criteria 1 is the month, which is this one here. And we also agreed that row 1, the whole of this row, and column B are our title, row and column respectively. What did we agree that you're supposed to do to the title, columns, and rows. We said that you're supposed to lock the title, columns, and rows. So in this case, our row 1 is the title row, because you are going to maintain 1 as we move this way. We change column from column C to column D to E to F. So 1 is common to all of them. We therefore lock that one. You hold Shift, then you click 4 to introduce them. Is now this item. But the first item that is required is criteria 2 range. So you go back to our data. Then now the mapping column. So you highlight all of this. Then you hold Fn, F4, you dollar reference the all of it. Then criteria 2 itself now become the first item, which is revenue here. And column B, being our title column, we therefore lock it by placing a $sign before B. When you are placing a $sign before 1, we were locking row 1. That's why we place our $sign before 1, not C. Remember, C is the column, but 1 is the row. These numbers represent the rows, and these letters represent the column. This time around, we want to lock our column B, and therefore place our $sign before B. Then you close the bracket, enter. So as you fill your formula here, it gives you that, and it automatically fills out whatever you need. So the next item here that we need is cost of goods. Cost of goods. From cost of goods, we are supposed to get gross profit. From gross profit, we are supposed to go to operating expenses, where we have now interest. We have interest here, we have loan, we have taxes, but after gross profit, we are supposed to have our depreciation. Depreciation, then from depreciation, we are supposed to get earnings before interest and taxes. Then we have our interest. After interest, we are going to have now earnings before taxes. Then we have our taxes. From taxes, we are now going to have earning after taxes. How do we adjust the formula? Gross profit is equal to revenue minus cost of goods sold. Then you autofill that way. EBIT is equal to gross profit minus depreciation. EBT is equal to EBIT minus interest. Then you have your taxes, and earning after taxes is equal to EBT minus taxes. From there, this one is earning after taxes, or you can call it profit for the year. before we get the item that we are supposed to transfer to the balance sheet, there is retained earning from previous year of operation. So retained earnings from previous month of operation, our retained earnings was 0. So we write 0. It was retained earnings brought down, which is 0. But our retained earnings for the second month of operation should be the retained earnings carried down in the first month of operation. So how do we get our retained earnings carried down? Our retained earnings carried down is profit for the year plus retained earnings brought down. Somebody had a question at this point, so I think you are now able to see it. Our retained earnings carried down is equal to profit for the year plus retained earnings brought down. Our retained earnings brought down in this first year of operation is 0, because from our source data here, we did not have any retained earnings appearing in the information provided. So that's why it is 0 here. Okay, our carried down is equal to summation of profit for the year and retained earnings down. So you do it that way. We've also agreed that retained earnings brought down is retained earnings carried down in the previous year of operation. So it means our brought down in the second month of operation is this carried down in the first month of operation. The formula continues, so you autofill it that way, and now you are able to get your retained earnings carried down. So this retained earnings carried down is what we are supposed to take to our balance sheet. So up to that point, you are through with your income statement. Let's now move to balance sheet. And we also agree that the first item in balance sheet is fixed assets or non-current assets. Of which in this case is bank. Buildings. The buildings are given at cost. And since this is a fixed asset, it has to depreciate. So we are going to have accumulated depreciation so that we get the net book value. The net book value item, after net book value, since we only have one non-current asset, so our net book value becomes the total non-current assets. So we want to get total non-current assets. From there, we are going to current assets. Where now we have our bank. And stock. That's why we have our bank and stock. So total current assets from there, we are now supposed to get total assets and current assets. Then we move to financed by. Under financed by, we are supposed to have capital and retained earnings carried down. And since we did not have capital, it will not be there. But you are now going to have total capital. Then from total capital, now we go to liabilities. And under liabilities, we don't have current liabilities, but we have long-term liabilities. And the only item that we add under long-term liabilities was loan. So total liabilities. Having gotten total liabilities, we are supposed to add total liabilities and capital and total capital. So let's now insert the formula. Remember, buildings was already captured there, so just pick in here, control copy. When you paste the formula, it automatically gives you the value of building there. Any item that you have also created, if we copy here and put it here, if we have the correct name to head there, it automatically gives us that item there. So let's now do the adjustments of the formulas and see how it works out. Our net book value is equal to cost minus accumulated depreciation to give us net book value. And total non-current assets, our total non-current assets is only going to be this NBV because we only have one item here. So total non-current assets become the NBV. How do we do this part here? Just do the summation of total current assets. Total assets will be equal to summation of total non-current assets, comma, and total current assets. If you do that, you are able to get now that this one will be the balancing figure against total liabilities and capital. Okay, so total liabilities, you only had one item, so it is just that. That is the total liabilities. Control B to make it bold. Total liabilities and capital is equal to, sorry, is equal to total capital and total liabilities. This one also should be bold. It is now our next balancing figure that you are going to use and compare if our balance sheet is balancing. Okay, total capital is equal to, under this place you only add retained earnings. We don't have capital, so this one becomes the summation of capital. If you are able to see, you can now see that I've skipped 2 items. Is there someone who is able to see the items that I have skipped? Would you please type for me in the chat box the 2 items that I have skipped in the balance sheet? There are 2 items that I have skipped in the balance sheet. Is there someone who is able to see? Okay, I've skipped accumulated depreciation and retained earnings. Okay. I have skipped accumulated depreciation and retained earnings. Reason being, they are items that we are going to borrow from our income statement. So that is the point where we are going to link our balance sheet and the income statement. So our retained earnings is automatically the retained earnings carried down. So how do we refer to it? You just place your cursor there, equal, and you refer to retained earnings carried down in the first month. And when you autofill your formula, it automatically updates that. That is the retained earnings. Let's now come to accumulated depreciation. Let's assume that these people started their business in this month of January. What will be our accumulated depreciation? Let's listen and listen carefully. If we did not have accumulated depreciation in the source data here, where we had these items, we did not see anything in the name of accumulated depreciation, but we are only able to see depreciations for those respective months. Therefore, our depreciation for this month, we are going to assume that this asset was bought in that specific month, and therefore the depreciation in that month becomes the accumulated depreciation in that specific month. So we join it with the depreciation in our income statement. But then if we now move to the next period of operation, that is February, we are now able to see accumulated depreciation. That is the depreciation in the previous period of operation. So accumulated depreciation in the second month of operation will be accumulated depreciation in the previous month plus depreciation in this specific month, so that we get accumulated depreciation for the entire month. That is accumulated in the previous month of operation plus depreciation expense in the current month of operation to give us total accumulated depreciation at the end of the reporting period. So that formula will be borrowed to the subsequent periods of operation. So let's see, if you are going to check this one here, it will be accumulated in the month of March plus depreciation expense in the month of April. Let's see where for our formula points. It is this one here, accumulated in the month of March plus depreciation expense in the month of April. So if you do that, it automatically reflects and adjusts. Are we having any difference in the balancing figures? Let's see, is equal to this one minus total liabilities and capital minus total assets. Are we having any variation? Let's see. We don't have any variation. That means our balance sheet is now balancing. Okay, somebody requested me to repeat the part of retained earnings brought down. So let me do away with these ones here. We all know that up to this part of profit for the year, we are good to go. Our problem now comes in the part of retained earnings brought down and retained earnings carried down. Retained earnings brought down is whereby you've made profit in the last month of operation. You've not given out this profit maybe to buy any other asset. It is retained to be part of the business. It is still there. So when it is still there, then we have retained it. We have not distributed it to shareholders. Therefore, we are going to bring it back here, the retained earnings brought down, then we add it to the profit that we have earned in that specific period to help us get what we are supposed to take to income statement under shareholders' equity and capital. In our source data here, we did not have anything in the name of retained earnings brought down. Therefore, our retained earnings brought down in the first month of operation will be 0. Then, how do we get retained earnings carried down? Our retained earnings carried down is equal to profit for the year plus retained earnings brought down. That one is in the first month of operation. In the second month of operation, our retained earnings brought down is the retained earnings carried down that was not used anywhere. Therefore, it is equal to this retained earnings carried down here of the previous month. It will refer to the whole of it up to here. So which means our retained earnings brought down in the month of April is equal to retained earnings carried down in the month of March. Let's see, it is reflecting that. So, but then we have also agreed that our retained earnings carried down is equal to profit for the year plus retained earnings brought down. That is what we have done here. That is profit for the year plus retained earnings brought down. If that is the formula, we now autofill it to the last part and it automatically updates. So our retained earnings carried down in this month becomes brought down in the coming month. Retained earnings carried down here becomes brought down in this month. What if we had another month here? Then our retained earnings carried down could have been brought down, could have been whatever is here. The one that is here is what becomes now the brought down in the next financial period. That is how you do it. Then we now take this one here to our balance sheet in the shareholders equity and capital part by referring it to it. So do we have retained earnings carried down? Yes, we have it here. So we activate by referring to whatever is in our income statement there. Then we now autofill it towards this side so that we get this. If we now compare the total liabilities and capital items against total assets, we are getting 0 differences, which means our balance sheet is now balancing. So from that part, we can make these ones here. To be bold, that's way. So our financial statement, balance sheet, and income statement is complete. Are we all together up to that specific point? Oh, somebody's asking me where we get the lines. Those are what we call borders. We call them borders. If you check at the top of your bar here, there's somewhere here, this one B that represent bold, there's I that represent italics, there's U that represent underline. Then after U, there is this one here that is top and double bottom border. So you click here and you choose the specific type of border which you need. Do you need whatever will be giving you equal sign, which is down here? Do you need just something that is underlining the bottom, which is this? Or do you need something that is going to place all of these boxes with the lines? Let's say like you have highlighted that part and you want borders throughout. Are you able to get those borders? Okay, let's see. You come here and check all around borders. If you like click like that, you're now able to bring those borders there. Have you now seen it? Okay, that's good. Are we all together up to that point? Anybody who has not understood anything? Can you repeat your part here? Accumulated depreciation, please. Okay. I'm going to do it right away. Any other concern? Any other concern? Okay, let's see how accumulated depreciation comes. Let's delete all of this. Are we all in agreement that for us to get net value of non-current assets, we check the cost of that non-current asset minus accumulated depreciation? So how do we get accumulated depreciation? It automatically means it is the total depreciation that has been done to that asset during its lifetime up to that specific time. So in this case, we are only given in our source data, we are only able to see depreciation expenses. There is no place that they have indicated accumulated depreciation. If they could have provided accumulated depreciation, even in the first month of operation, we have accumulated depreciation somewhere, then we could have placed it here. Remember, in this case here, that first accumulated depreciation that would have been in this information here for the first month could have been in the previous month of operation. So how do we get now total accumulated depreciation? If you can recall, accumulated depreciation account normally has a credit balance. That is why that's normally say balance brought down. So in this our case, our balance brought down is what was provided here in the previous months of operation. Our balance brought down in this case is 0. But then in this month of January, we add depreciation expense of 4,500, which is from profit and loss account. So this account normally has credit balance. Remember, if you are using depreciation here, we are debiting it. Expenses are being debited. They have debit balances. So that's why we now come here and place P, profit and loss account, and put that 4,500. That is in the first month of operation. So that is the end of that. Let's say this is the first month of operation. What will be our balancing figure? Our balancing figure in the first month of operation, remember we had 0 here. So our balancing figure for us to balance all these is equal to, that is the total that is what we have there. So our balance carried down is going to be the balancing figure between totals here and here. So if you add all this, you're going to get 4,500. Then what should we do to get 4,500? What should we do to get 4,500? It is going to be this total minus summation of all the items that are here. We are now going to get 4,500. That is the balance in our accumulated depreciation in the first month of operation. Is it not the same as depreciation expense in the first month because we add a 0 balance brought down? Let's say we add a balance brought down of 100. We had a balance brought down of 100 from this data source here. We were given that accumulated depreciation is 100. So if you come here and you make that 100 to be there, you are going to get balance carried down to be 4,600. So that is what we could have placed here to be accumulated depreciation in the first month. But since we add 0, our accumulated depreciation automatically becomes the depreciation expense in that specific month. That is why we are taking equal sign, then we refer to depreciation expense in that specific month. That is the first month of operation. We are now moving to the second month of operation. This balance carried down will be balance brought down in the second month. This one is in the first month. So let's now move to second month, which is February. Our balance brought down will be, this carried down, which is 4,500. And whatever is now going to come from P, profit and loss account, is the depreciation expense in the month of February, the second month. What is the value? If you check here, our depreciation expense is 4,500. So that is what we bring here to be 4,500. What will be the balancing figures here? So our total is equal to 9,000. Then how can we make this thing to balance? It is going to balance by now having balance carried down. Our balance carried down will be this total minus anything that is up here. then we automatically have 9,000. So how do we get that 9,000? We have gotten 9,000 by taking balance brought down from to accumulated depreciation in the previous month of operation, 4,500, which is this balance brought down. So it is this one here. Then we add depreciation expense for the month of February, which is this one here. So when we do that way, it automatically adjusts as we move downwards up to 18. So as we are going to move to the third month of operation, which is March, the same continues. So our balance carried down, which is 9,000, will now be the brought down here 9,000, and P and L will bring the same item in that specific month, which is 4,500. So if you add the two, you are going to get 13,500. That is what we have here as 13,500. Are you now answered? Is your concern now taken care of, Jonty? Okay, that's good. So I think that is all about preparation of financials, the balance sheet and the income statement using mapping concept. Is there somebody who has any question? Okay, there is something that we are almost leaving out. We want to use what we call sum product. Sum product help us to get total the number of items multiply by their prices to get what each student or the total for that specific unit. So let's say these are the institutions that offers CPA, it offers CFFE, it offers Excel, something of that kind. So in 2018, we were able to register 1,200 students. CFF, it is not very famous. It is not famous. So we had 800 students. Excel, we had 1,500 students. And the fee for CPA, let's say it was 26,000. This one here, it was 32,000 per student. And this one here, it is 2,000 per student. In 2019, the number of students increased. And now we add 1,300 students taking CPA, CFF 960, and Excel, we now add 2,100 students. So the prices also, due to inflation or time value of money, the prices are also adjusted. So we now have 27,300 per student. This CCFE, we now have 34,000, and this one we now have 2,500. So in our normal way, somebody could go ahead and create sales here or revenue and take this one times this and get summation of all that. It is okay. but there's a shortcut of getting just a single formula that helps you get this unit multiplied by the number of students and the fees, and you get the total fees that was collected for the 2 years. So we want to get the total number of students who did CPA. So students, the number of students who did CPA. How are we able to get the number of students who did CPA? We now use some products. Activate your cell is equal to sum product. The first thing that is required is array. Our array is this part here where the units are. And in that array, we only need total number of students who sat for CPA. So you say equal and you pick this. Then you close your bracket, but then there's a small bracket that you place there. We want the total number of students who sat for CPA. We want the total number of students who sat for CPA times the second array is this one here. So we are now able to get that 2,500 students sat for CPA in the 2 months. Let's see. So CPA is 1,200 plus 1,300. Is it giving us 2,500? If we do it manually, it gives us 2,500. Let me repeat. We want to get the number of students who did CPA. So you activate your cell is equal to some product array. Our array is the unit here. You don't separate using a comma. Mark that you don't separate using a comma. If you use a comma, then it is going to take us to the second array. But our point of interest here is we want to get the number of students who sat for CPA, the number of students. So equal to this one here. Then another point of concern is here. I think you are able to see that I'm placing a bracket to close this range and equal, that is E5 to E10 is equal to J12, which is CPA, the range of the unit and the specific unit that we want its details. We are putting that. We don't separate using a comma in this case, and also we introduce another bracket. Then the next thing that we need is we multiply. We multiply by the second range, which is now the number of students. We multiply by this. Then you close your bracket, enter. It will help us to get the number of students who sat for CPA. What if we change this CPA to be Excel? It changes to 3,600. Let's see, Excel, we have 1,500 in 2018 and 2,100 in 2019. That is 3,600. 1,500 plus 2,100 gives us 3,600. Can someone try and tell me if it is doable? Is there someone who has tried and has managed to get it? Somebody is stuck somewhere? What if you want to know all units combined? Okay, if you want to know the number of units combined, we are able to get that. First of all, try this one and tell me if it is doable. The first person to do it right is entitled to a prize. Anybody? We now want to get the total fees that were paid by these students who sat for CFFE. So you activate your cell, some product. Our array is this one here, equal. You want to get the details of this unit here. You close that bracket. By this, a bracket that you introduce there. Then you separate your workings by multiplication, not comma as we have been using in other formulas, times the next range is this. Times another range that where we have the fees now. And you close your bracket. So that is the total fee that were paid by those students who sat for CFFE. You separate your range by use of multiplication sign, not comma. We separate your cells by use of multiplication, not comma. Okay, so having done that, if you change the unit now to be CPA, it automatically updates the number of students and even give you the total amount that has been earned. Is there someone who is able to do this? Even the first one, getting the number of students? Somebody? Okay, so that was a shortcut of getting that. So I want us to do it a way that, let me see. If you say we now have another unit here in the name of, we want to do them horizontally. So somebody is saying that, what about EFFE? If you put it there, sorry, CFFE, and you drag your formula towards that side, you are going to get 0. Well, let me see why we are getting 0. If you see, as we drag our formula toward this side, it is also moving and leaving our first range. So that one means we need to introduce the dollar referencing so that we don't move away from our ranges. So you do away with that by coming back to the original formula here and activating our cell sum product Our first array is this one here, but we don't want to move away from it. So we reference the whole of it by holding Fn, F4 equal this one here. There's a bracket that we have to introduce there. You multiply by our next array is this one for students. So that array remains that. We also $reference it. Then you close your bracket. So if you enter, you're able to get that. So even if you now autofill our formula towards this side and put a unit there, let's say CPA, it automatically updates Excel. It updates by itself. Let's now go to fees. Total fees, also just activate your cell. Some products. Our first array is this, and we lock the whole of it equal to this unit here. Why are we not locking this? Because we are going to move this direction. But then this one is our title row. So we can introduce a $sign to lock that 12, which represents the row. That bracket is very important. Multiply, the next range is this. You $reference it. You multiply, the second range is this. You $reference it. Don't want to move away from it. You close your bracket and you enter. So you are now able to get the total fees as you move. So if you change this one here to be CFFE, so whoever was asking us to get the total number of students, you simply now say, you highlight these two, then you say alt equal. So it automatically gives you the summation of these ones here, and this one gives you the summation of this. So you can change this one here to this format here and reduce the number of decimal places. If you see this, it means the space is small. That is why we have that error. So you double click the space to get the full figure. So by doing that, using some product, you are able to get total number of students who sat for CFFE for the 2 years and the total fees that were paid by each, without coming here and checking this one times this plus CFF in 2018 times that. Using some products and that referencing, you are able to get the answer and the total fees that were collected in those respective years for the respective units. Are we all there? Are we all there?